Right, something a bit different today, Jet Setters. So I've been doing these videos for about just over 6 months, started middle of September last year, following the US equity markets, the Australian equity markets, the US bonds, the Aussie bonds, a bit of gold and the currency. And I want to go through how that's actually gone for me, because one of the things that shits me about the various plonkers that are out there that do these things is, well, I think when it comes to trading, they're actually full of shit. They talk a good game, they come up with a whole lot of various things, but really they're there to make money out of their shitty little chat rooms and selling stupid dick-ass courses. And I don't actually think, most of them I don't think actually trade at all. Or they do, who knows exactly what their track records are. So I'm going to go through my track record for those markets that I follow. I'm not going to give you the actual dollar amounts because that's none of your goddamn business. I'm going to translate it into a currency known as biscuits. So I start off in September with 3 biscuits in my trading account. I've now got it's like 17 or 18 biscuits. And that came about through a few things. So in the US bond market, which is mainly the 2 years, I've made a bit over 4 biscuits. And it's come about partly because of technical analysis, but actually more because of a macro view. The macro view was these things were down really low, but the technical thing is it had started doing my favourite turnaround. And I got onto this at the end of September, beginning of October, and have ridden it all the way here. This is my first target. This is my next target. And I've just started taking some of them off just today in the way of a steepener, right, with the curve going flat. So out of the, I guess, 14 biscuits that I've made, 4 of them have come from that. My broker put me onto it. He said, mate, have a look at those 2 years. I had a look at them and said, oh, I said, mate, that is an absolute goddamn no-brainer. In Australia, we'll look at the bond markets first. In Australia, I've made about 5.5 biscuits out of a similar trade. This is the Aussie 3-year bonds. A similar thing. Where I looked at them and it was, mate, these things, are going to go, and they did. I got onto them a bit earlier than the US 2 years. The 10 years, I've been short the Australian 10 years. So as I said, between the Aussie 3 years and the 10 years, that's like 5.5 biscuits, which has been quite satisfactory. All similar thing, these bonds, where partly it's a technical game, but really it's a macro play of just looking, going, mate, these rates are so low, they do have to move. And I took a macro view on inflation and reserve banks being behind the game. I was just looking around at everything that was going on in Australia, and prices were going through the roof, and I said, mate, the inflation genie is out of the bottle. And so that was really my macro view. So I think with technicals, it's all hindsight. I actually don't think there's good money in technical trading per se. I think it's bullshit. I think it can be helpful in some senses of my broker actually calls it a bit like field position, right? But really, to me, my best money has come out of some of these macro trades. More recently, in the bunds, I've made, what's that, about 1.5 biscuits out of the German 10-year bonds. That's been really easy. And this was, I guess, 2 things. There was a technical view of, or a macro view of, Germany's AAA, Australia's AAA, their inflation is a lot higher. It's just come in at like 7.5% just tonight. But even then, back then when I put this on, their inflation was at in the fours or something like that, well above Australia's, but their bonds were like at zero, right? And when they started breaking through, I said, right, that's it. This is time to go short. They're pretty volatile for a 10-year bond. Anyway, so I've been short them. So that's like between the Aussie bonds and the US and the Euro bonds. That's about 110 biscuits, I think. I'm just doing the maths. 5.5, 1.5, 4. Yeah, so that's about 11 biscuits out of that. Out of the 14 or whatever that I've made. That's been pretty good. The next one, the Aussie dollar I follow. I've made about 10 biscuits out of the Aussie dollar. This was very much a technical trade, actually, more than a macro one. And it was technical because I remember sitting in the middle of the night seeing that the Aussie just spiked to 80 cents. I was kicking myself because I didn't short it. And then it came off pretty quickly. It recovered. And I thought, right, it's doing this. I don't believe in these head and shoulders patterns, really. But this one came off. And when it broke through this, I said, that's it. It is going to this level here, which it did. So I wrote it down. And I've recently turned around and I've been going long because it's broken that channel, and now it's a bit more of a macro play as well as the technicals, because I think with the commodity prices going, it's off. So that's that. Now, then it comes to the equity markets. In the Aussie market, I've made 3 biscuits out of the Aussie market, and that has really come about almost solely off one set of trades, which was when the market dipped down, like in January. I saw that it had broken this level. I thought, all right, that's it. Where's it going to go to next? And I saw this level in here, through there, and we can see resistance, support, resistance. I thought it's going to have support there, and so I bought some contracts there, and I wrote it back. I wrote it back to about here. Okay, I've just gone short again. It would have been nice to write it further, but I guess with the action in the bonds, I just haven't been convinced about this move in the equity markets. Just out of interest, this has done a classic, a little ABC move like that. See that? That's like a 1-to-1. Good level to short it, in my opinion. Overbought on the 4 hourlies, not on the hourlies anyway, and coming up to new all-time highs. I think it's worthwhile shorting it. When it goes to 75.50, I'm going to lob out some more. So I've made 3 biscuits out of that. The US market, I've actually lost about. I've lost a biscuit in. That's not so good. It's really volatile to trade, and the main reason why I've lost that is partly I had a trade on the spread between the US and the Aussie equities. So part of what I lost, I made in the Australian market. So I guess I should look at those together. But part of it is because of a couple of things. This top in September, I called that well, and I shorted it, but I gave it all back when it came through there. And I haven't done totally the same thing, but the similar thing has happened here, where I gave a fair bit of what I made on the way down back here. This one I shorted, it's on the 21st, and it was just when it broke through this level. So this was a technical move, right? And rode it all the way down. I'll give the action the bonds. I was bearish, but it has done exactly there, and so I've given some of it back. But you can see out of like what I've done, right? So out of the turning the 3 biscuits into 17 or 18, right? Out of the Aussie bonds, that's been like 5 or 6 biscuits. The US bonds has been 4. The euros have been like 1 or 2 biscuits, like 1.5. They have been primarily driven by macroeconomics, supported by some technicals for execution. Right? The Aussie, I've made a biscuit out of that. That's largely been on a technical, right? So you can see the orders of magnitude differently. I've made 10 times more cash on the bonds than the Aussie, and that's because I was able to back it up with the macro side. And when I look at the combined equities thing between the US and the Australian equities, that's like 2 biscuits, right? So, so I've made 1 biscuit out of the Aussie, 2 biscuits out of the equities, and the rest, like 11 biscuits or whatever, out of the bonds. So that's what I've been doing, right? Half a biscuit down the drain on gold, right? And gold, that was like purely technical. There was no macro really. Oh, there's a bit of macro to back that up in terms of correlation with yields, but a lot of those correlations, they can be iffy, right? Because there's so many markets you can correlate together, you can kind of invent justifications. Having said that, I'm still bearish gold. I think this has been a little false break. It's going to come back sooner or later. So that's basically how I've been going. So I've been able to turn 3 biscuits into 17. So that's like 17 or 18. So that's kind of 13 or 14 biscuits, of which kind of 11 have been the bonds, 1's been the currency, 2 or 3's been the equities, and the only one I've really lost actually in is gold. That's like half a biscuit out of that whole thing. So that's been my track record over that time since September. So I guess the thing to take away from that is, I guess I wanted to share that to say, look, I'm not full of shit, right? The markets I've been commenting on, that's what I've been trading, and I'm the only one that I've lost as small as in is gold, and that was really because of the breakout like here on the back of I was kind of short, kind of broke, didn't really believe it. I was out really before the Ukraine thing happened, but I've been short kind of down in here as well, waiting for it to break, but small positions anyway. So that's the only one that really hasn't gone well, and out of like the 12 or 13 biscuits I've made, losing half in gold, whatevs. But that's kind of it. I guess the other thing to take out of it is the technical analysis. It is bullshit. I mean, it really is total bullshit. You don't need any qualifications. You can draw lines and come up with rationalizations all over the place. To me, the real money is made in really the big macroeconomic calls, and for me, that has been reinflation, right? Which has been the big call and the big theme that I've had on in the bond market, and then the other one, the next one has been corrections in equity markets, which I've got a little bit right, but nowhere near as much right as I would like to. I think that is coming, and then the other macro thing that's been really a correction in the Aussie, and then coming back with the commodities story driving it. If there's one thing I can teach you today, it's like, really day trading of technicals, it's a fucking joke. Even longer term trading of technicals is 50-50 at best. Macroeconomics to me is where it's at, and the proof in the pudding is there. And when you look at the global funds that are around, you don't get day trading funds. They don't exist because they're a joke, because people don't make money out of it, right? Even the professionals don't and can't. The big ones that are out there are thematic ones, right, where they just have a theme and that's it, and whether the theme works out, it's great, or if not, they're index ones like ETFs, or they are global macro ones and they look at the macroeconomics. That's my schooling. Anyway, look, I hope that's helpful. As far as where the markets are going to now, look, Frank, in all honesty, your guess is as good as mine, right? I can do all the analysis here and it actually won't make any sense. But to me, I talked the other night about retracements. This is quite a deep retracement. It can still go to there, right? I really struggle to see any reason why it should go any higher. I think that it is due for a turnaround on a couple of measures. The RSI said, when I do look at these technicals, like a 4-hourly RSI to me is a very good one. Look at that, right? Massively overbought, right? The last time we saw that was over here, okay? And it was and this has been a bigger run up, okay? Approaching that Fibbo there, which is, kind of take that with a grain of salt, those ones. That's 70, 78, 61. But to me, that is looking like it's turning. Haven't really got masses of negative divergence. It's starting to turn there a little bit. But to me, I reckon it's looking right for turning. Maybe the end of the quarter will drive it. I guess the other thing is, let's have a quick look at the Bollinger Bands. As I said, the RSIs and the Bollinger Bands, they're the ones that I really look at. You can see how it's right at the top of that Bollinger Band, which is kind of what you'd expect. Very reasonable for it to pull back 4,500 quite easily. Let's get rid of that. Let's make a look at the daily. Really, my God. Yeah, that's just a reflection of the volatility that we've seen in the market. It could really easily come back a fair bit. So I have got my eye on it coming back to, I think, this level in here. For starters, on the technicals, sideways to lower is my best guess on that one, but it is a best guess. Anyway, look, that's pretty much it. I hope that's helpful. We'll catch you later on. Okay, ciao.